Clem Chambers joins us once more. He is a founder of ANewFN. We'll be talking about his outlook for markets, with markets at all-time highs. Can this momentum be sustained? Clem, welcome back to the show. A lot of volatility in the last couple of weeks, mostly to the upside. Bitcoin surpassing 120,000 at one point. Stock markets reaching new all-time highs. NVIDIA and the tech sector leading the charge. NVIDIA now becoming the world's first $4 trillion market cap company. Now, you've been bearish on tech stocks earlier in the year. This was right on the onset of Liberation Day, early April. People can check out that interview down below. You've been correct to call for a big decline in stocks and equities. That was followed by a massive rally once tariffs were removed, except China. So let's just evaluate what's happened since the beginning of the year, January, and whether or not your outlook has changed, especially for Bitcoin. You've called for Bitcoin to reach 120,000. It has. So congrats on that call. And now, are you still buying Bitcoin? Are you out? Let's just get your market outlook here.
Yeah. I got out at 100 when it paused, because I'm good at calling the first run, and then the aftermath I'm not so good at. And we had last cycle, we had that first run, and then we had a big correction, and then we had a second run. And this is repeating that this time round. And the second run was caused by Afghanistan. And this time we know what it's all been caused by. So, that is, you can't really call these geopolitical, for want of a better word, wars. And Bitcoin will do well, because Bitcoin is for flight. Gold is for war, Bitcoin is for flight. And there's people sweating what's going to happen and getting ready to flee. They buy Bitcoin, and that will push Bitcoin up. So, this is where we are. And if it continues that we're going to get these wars and conflict breaking out, and country X will bomb country Y, it will support Bitcoin, and Bitcoin will be elevated by that. If calm breaks out, or at least a end of these outbreaks, then I think Bitcoin has seen its high. But you simply can't predict. I mean, who could have predicted that Israel was going to bomb Syria yesterday? I mean, this is the sort of thing that's going on, and that will lift Bitcoin. And something that's very important about Bitcoin, I think this is totally overlooked by so many people. When they bombed, or when the US bombed Iran, 25% of the hash rate of the mining of Bitcoin stopped. Because Iran is 25% of Bitcoin, i.e. they're 25% of the mining of Bitcoin. So the international currency of Iran is Bitcoin. Well, that can't be good for Bitcoin in turn. And, Iran is basically liquidating 3 to 5% of its oil production to mine Bitcoin. Well, so, I found that quite disturbing in terms of the long-term prospects of crypto and Bitcoin. And, people are going to go, what are you talking about? Go look at the hash rate during the bombing of Iran. 25% of it just disappears like that, because they had power cuts, didn't they? So all those Bitcoin miners got switched off. Well, that's not so good, is it?
But is there a relationship between the hash rate and the price?
Well, yes, there is. But there's more of a relationship between a country whose enemy is using Bitcoin as a major source of revenue and a major source of sanctions busting. I mean, you can't really expect America to be too bullish about Bitcoin when Iran is using it as a way to get around sanctions and build a nuclear weapon. Can you?
Another explanation, take a look at my screen now, Clem. Global M2 money supply of major central banks, that's been rising ever since the market trough in 2022.
Absolutely. M2, it's all about the M2. And, that's why my positioning is more precious metals and commodities these days. And I'm not a fan of commodities and precious metals. Instinctively, I hate them. But the M2 issue is a big one, because, they're printing and printing and printing. Now, the other issue is that if you print money and you give it to rich people, it doesn't tend to create inflation, because rich people go, well, I've got a lot of this already. I'll give it to the bank, or I'll buy some rich man's assets. I'll buy houses, and I'll buy equities, and things like NVIDIA go to 4 trillion. But if you give it to normal people, they go out and spend it and cause inflation. And of course, the new act that's come out, the new bill that came out, gives people that work in restaurants tips tax-free. and gives overtime tax-free. So that's an injection at that part of the financial pyramid that is pretty inflationary. And, M2, if it goes into people who aren't well off, does generate inflation. That's how it happened. And that's why QE didn't generate much inflation when it came out, because the money went to the rich and everybody moaned about that. Oh, the rich people getting all the money. That's not fair. But actually, it does keep the effect of a rise in M2 from generating instantaneous and strong inflation. And, but we're going to have elevated inflation, and things like crypto will be helped by that, and things like gold and silver, and my favorites, platinum and palladium, and copper. I mean, there's just not enough copper for what's happening. There's nowhere near enough. And then people aren't even folding in the impact on copper of AI, i.e. the amount of copper that's going to be needed to actually fuel this AI revolution. There's just not enough. And the penny hasn't dropped yet. So my positioning is for AI is in the commodities that the AI infrastructure is going to need. And copper is absolutely an acute place there. And platinum too, and palladium.
Record investment is flooding into gold this year. Gold has already surged 30% so far in 2025, while the US dollar DXY index has fallen about 9.58% to a 3-year low. Silver is also on fire, hitting nearly 14-year highs, and mining stocks are exploding. The GDXJ index is up nearly 60% this year. Major banks are forecasting big gains, including JP Morgan, which expects gold to reach $4,000 per ounce by Q2 2026 and even $6,000 by 2029. Yet, despite this surge in the price of metal, many gold mining stocks have not followed suit. As you can see here in the graph, gold stocks have a tremendous gap to close compared with gold spot price, which has soared. This brings me to today's sponsor, Gold Mining Inc., that's ticker GLDG on the NYSE American, a company with strong leverage to the gold price and an asset base that includes publicly traded equities and resource stage properties. It's also got a pipeline of development projects and strong institutional and insider backing. Gold Mining Inc. is currently trading around 78 cents as of July 14th, about the same price as February 2019, when gold was less than half of today's price. Despite record high gold prices, GLDG is trading near its 6-year low. Gold Mining owns one of the largest gold and copper resource stage mineral portfolios in the Americas. It operates some dozen projects across 5 countries located in pro-mining jurisdictions: Canada, US, Brazil, Colombia, and Peru, with an estimated 12.4 million ounces of gold equivalent in the measured and indicated categories, and an additional 9.1 million ounces of gold equivalent in the inferred category. The company also has a portfolio of publicly traded equities and cash. Their publicly traded equity holdings alone are worth over 140 million US dollars based on the market closing prices of those securities on July 14th. Plus, they hold $4.4 million in cash and equivalents as of the last reported quarter-end financials on May 31st and has no debt. Gold Mining is advancing key projects. The company has just initiated the largest exploration program in the history of the company at São Jorge, Brazil, as we see this plus 1 gram per ton open pit resource with regional growth potential in a 46,000 hectare land package. The gold mining portfolio includes increasingly scarce large-scale gold and gold-copper projects in mining-friendly jurisdictions, just what the other major operators will need to replenish reserves mined through production. These are large-scale projects in safe jurisdictions with infrastructure advantages and a management team with deep experiences in building value over time. Gold Mining's leadership is stacked with mining veterans, including former Goldcorp CEO David Garofalo and serial entrepreneur Amir Adnani. Insiders own over 10 million shares, showing strong alignment with shareholders. Last, look at the key shareholders of Gold Mining Inc. Top institutional investors like BlackRock, Sprott, Morgan Stanley, Goldman Sachs, and the GDXJ ETF hold significant stakes, signaling confidence in GLDG's long-term potential. As always, make sure you review Gold Mining's public filings for important information regarding it and its projects, including its most recent annual information form and technical reports. These are all available at www.cedardplus.ca. Check out gold mining, ticker symbol GLDG, and visit their website, goldmining.com. Let me come back to the precious metals and palladium and platinum and why you like those metals. Bitcoin then, let's finish off on Bitcoin. Your outlook after 120,000, what's next?
Well, if they keep people keep bombing each other, Bitcoin is going to remain strongish. I don't see 250,000 like the maxis see. Next stop 250,000. If a little bit of peace breaks out, it's going to go back under 100,000. And I would still say that now it's hit 120. My target is 60.
So why is Bitcoin dependent on geopolitical volatility?
Well, because if you're a minister of somewhere in somewhere that's getting bombed and you take your $300 million worth of ill-gotten gains, you're not taking that through the airport, are you? You're taking it with Bitcoin. And you'll pay a high price because you need it quick. And every time you see one of these things, every time you see Bitcoin go like that, just count to 10 and something nasty happens. Time and time again. Every time Bitcoin goes like that, something wicked this way comes. Because it would be. Bitcoin's for flight. It's the only way you're going to get through an airport with $100 million. No other way. And, in Afghanistan, which was the spike before in the last cycle, some minister left $5 million in cash on the tarmac because he couldn't stuff any more stolen stuff in the helicopter. You can look that up. $5 million in dollar bills left on the tarmac. You don't have that problem with Bitcoin, do you?
Are you then saying that stocks are also going to continue going up if bombing continues, given that stocks and Bitcoin are correlated still?
Well, I would say that if M2 keeps going up, definitely. Yeah. Because what you're seeing are these markets are juiced. They're juiced with money supply because countries have found a way of getting money into the system that actually, filters down, does its job, and doesn't create as much inflation as printing it and handing it out to everybody.
Well, that's what
QE is all about. And it goes into equities. It goes straight into equities, and funny enough, real estate. And everybody in government loves real estate, and probably they've got their fair amount of equities too. And that way, it doesn't cause disastrous inflation, and it's a controlled way of running big deficits.
That begs the question as to which assets do well when money supply goes up. The concept is quite simple to understand. There's more money in the system. The rich, government, and institutions, they need to buy things with this extra money because that's what they do. So the question is, what do they buy? Take a look at this article. Gold has been bought en masse by central banks worldwide in 2025, on track to buy 1,000 metric tons of gold this year. Gold prices are up 29% year to date. Now, the point I'm making is, Clem, let's suppose you were given $10 billion, just airdropped, okay? Now, you want to do something with the money. Maybe retire, but you want to invest the rest of it. What are you going to buy first?
Well, it's going to be equities. I mean, it depends if you've got rising interest rates coming and you wouldn't want bonds, but bonds and equities, yeah? But you don't, gold is for war, okay? That's the thing that you have to hold in your mind. Gold is for war. So as global geopolitical tension goes up, central banks buy gold, because gold is the money of war, and you better have it in your account if it breaks out. There's no good trying to buy it at the last minute. Bitcoin is for flight because you buy it at the last minute and you head for the airport. Gold is for war. So flight is one part of international tension. I'm sure there's a lot of Iranians were thinking of heading for Dubai when they were getting bombed, right? So Bitcoin goes up because Bitcoin is for flight. But when America starts to go rah, rah, rah about China, or India starts to go rah, rah, rah about Pakistan, etc., those central banks have to get gold in them. They have to build up their reserves of gold because gold is for war. And you can't buy it in the last minute. You have to lay it in. So gold is for war. But if you're inflating, if you're juicing up your economy, you don't want to give it to normal people because they not only do they need to spend the money, they like to spend the money. That's why they haven't got much. They're not misers, rich misers. You give it to a rich miser, you give it to the bank, and the bank goes and buys equities and puts it into funds that buy government bonds and buy real estate, rich people's assets. And those assets go through the roof, as you've seen with real estate in the last 10, 15 years. And the equity markets go through the roof, as you've seen in the last 10 or 15 years. And then people are going, how can Nvidia be worth more than the whole of the British stock market? How does that work then?
Well,
it's because the market is so juiced.
Clem, as an investor, are you concerned about the high valuations that equities now show, or maybe the valuations are fairly priced in right now? I don't know. I'll let you evaluate at over 6,200 on the S&P. Yeah, I mean, is that sell signal for you?
No, it's not. What was a sell signal for me was when the new administration were throwing all these epithets around and scaring everybody. That's why I got out before it crashed. And I could not have believed that it was going to bounce like it did. And the miracle on Wall Street was something that still nobody can explain to me. And I believe it was the Treasury just printing money and doing their thing rather than the Fed doing it. But anyway, whatever caused that, we're back to some inverted commas normality. Now, I was saying before that event occurred that by and large, the American stock market would go into a bubble phase. Now, you could say it's in one already, but I think it's at the end of a boom phase and potentially going into a bubble phase. Now, it doesn't have to. You don't have to believe me. All you have to do is watch. If you watch and then it starts to go into what looks like a bubble, hello, we're in a bubble, and that will go vertical. And anybody that wants to trade that can make a lot of money. But don't believe it, because it'll go up like a rocket, and at some point, just like 2000, it'll come down like a rock. And we saw this year how the market can come down like a rock. But on the way up, you can do very, very well. So anybody looking to make a goodly amount of money in a short period of time, just watch out for what looks like a bubble underway. Because if it looks like a bubble, it sounds like a bubble, and it cracks like a bubble, it's a bubble. And there'll be a lot of money to be made there. Maybe it won't happen. But it's like preempting things. What could happen is ABC, and then when A starts happening, you go, oh, look, my wild idea is coming to pass. I can put some capital there. So I think there's a strong possibility that we're going to be going into a bubble, and there'll be a lot of money to be made there if you get out before it's all over.
This is one of the most hotly debated academic topics in all of finance and economics. What is a bubble exactly, and how do we spot one? Clem, what's your definition? How do you do it?
It's when it doesn't make any sense. Now, it doesn't really make sense that NVIDIA is worth more than the whole London Stock Exchange. But you can make an argument for it. But if it was to double, it's like the bubble in property in Japan was, weeks after somebody worked out that the Emperor's Palace was worth more than all the real estate in California. Mm-hmm. There you go. It's like, no, that simply can't be right. It's simply got to be a bubble. And when a sock puppet shows up on television and the company's worth a huge amount of money, you go, that's that bad. For example, let me give you an example, and everyone's going to disagree with me about this. MicroStrategy is at a premium to the Bitcoin it holds, and I haven't checked up recently, but it was 80% when I last looked. So you could short their stock and you could buy Bitcoin and you're guaranteed to win. You would have thought. That's the sort of insanity that normally marks the top of a market. They say they don't ring a bell, but actually they do. The other thing that rings the bell is when you switch on the television show, and it's a very, very stupid news show, and the headline is, stock market has done this. That is, you've really got to be starting to counting down there. And I don't watch American television, but I'll tell you, when some terrestrial television show that's been going for 100 years says, oh, the stock market broke an all-time high and everybody's singing, isn't it great? That will probably be, 10 minutes to midnight. Normally is.
What do you make of the altcoins flying up in the past weeks, most recent 3 weeks, 4 weeks? Ethereum's up, XRP's up, everything that I can think of in the top 10 alts are up. That's yeah.
I was talking to some crypto guys only a few hours ago, and they were saying, oh yes, alt season, it's going to happen. It probably did in January. In that first leg, the AI tokens, Mickey Mouse things that never happened, but they're all about AI agentic tokens. They went absolutely ballistic. They absolutely did what the last altcoin season did. Now, are we going to get another one? Could happen. It could happen, because I don't think what you're getting now is what you got the last sequence, which is this global conflict where people are buying Bitcoin to flee with. So it's not part of that first move. which used to be what this is all about. There's a sort of secondary top, and I think we're in it right now. And you would expect there will be people going, well, Bitcoin's a bit expensive now. What else can I buy? So a read through, and yes, we are in a read through, and you know, it's I would say an early-ish signal. You know, you can get another 3 or 4 months of a high when that kicks off. It doesn't kick off in the last minute. It kicks off a month or two, or a month or three before a high. In previous iterations, and the past doesn't necessarily predict the future, but if it did, you would say, oh, the altcoins are starting to move. Oh, we're now getting into the final, you know, lapse of this particular cycle.
Is it the final or the beginning? I just point that out because last time in 2021, the alts moved pretty much in tandem with Bitcoin. In fact, it had a much higher beta. And as you'll recall, in the second bull cycle this time, alts lagged Bitcoin pretty much up until 3 weeks ago. Bitcoin dominance was surging, and then Bitcoin dominance fell like a rock. And then all of a sudden, alts are exploding.
This is all about all about cycles. And the last time there were all these altcoins were new, okay, and it was the major move, or certainly 2/3 of the major move of Bitcoin had happened, and then all these crazy coins came out. I know I was very fortunate. And this time around, the same thing happened, and it was the AI agentic tokens on Solana that did the crazy altcoins. And now we've got this after effect, this after echo going on, and you're getting a load of old coins which are picking up. They're not new coins. And the reason they're picking up, well, there's many reasons for it, but one of them is that it's going to be okay to be in the crypto industry because you're not going to get arrested. And the last time around, if you were in altcoins or any project at all, the SEC was down your neck suing you. So now that has come to an end, the regulation by enforcement environment of the past has gone away. There's room for these alt projects, A, to blossom, B, to be invented, and C, to actually reach out into the proper world and proper investors and proper institutions and engage. So that's very benign, but the cycle is Bitcoin, you know, goes mad, and then halves, and then goes into a winter, and then doubles again, and quadruples again, quintuples again, and then halves, and then goes into a winter. That is the long-term cycle, 4-year cycle. It goes back to the very, very beginning, and we're at the tail end of that. So, you know, that's my feeling. But all the people that are pro Bitcoin and pro crypto will tell you that it's going to double. So you take your choice. I say this is the top. They say it's a double. And, you know, if they start bombing somewhere unexpectedly, why not? It can happen.
Are there any alts that you are excited about, still like this season, this cycle?
Well, no, not especially. You see, my problem with crypto is it's become physically dangerous to hold it.
What do you mean physically dangerous?
Someone hits you with a hammer in the street, and there's been so much of that. What they call hammer attacks. You know, somebody comes onto a show like yours and talks about how clever he is at crypto. The next thing he knows, he's being mugged in the street for his crypto, and you know, that's a very, very dangerous thing. And so I can't really afford to be big enough in crypto, but for it to be worth my while. So that's taken the taste of crypto away from me, because, you know,
I think you should move cities, Clem. I think that's wherever you're staying is unsafe.
I'm sorry, you're not keeping up in the news, are you?
I'm probably not.
No.
Is it happening everywhere? I'm sorry. Comment below if you know of any cases of what Clem is talking about. But anyway, please continue.
Just type crypto robbery Paris. Just do that.
Okay.
That'll be enough. And it's all over. It's not. A friend of mine got mugged in I think it was Madrid, because he was at a crypto conference. People have been stuck up at gunpoint in Amsterdam. You know, it's just everywhere. Go on, check it out now. You think I'm mad? I'm not. So, you know, when that started to kick off about 9 months ago, I thought, right, I'm going to ride this up to 100 grand, and then I'm going to get out and stick to my equities, because no one's going to rob me of my equities, because, you know, you can always get them back. The thing about crypto is that once it's gone, it's never coming back. and that makes it a security issue for anybody with material amounts. So these days, I'm very much on the sidelines. If I see it very cheap again, I might go in the future, but I won't be sticking around.
While people are getting mugged and robbed for holding, I guess, Bitcoin or other cryptos, meanwhile in Dubai they have physical gold vending machines, and no one's robbing people at these vending machines.
Well, not in Dubai. Not someone just got murdered on a London street for his Rolex.
Yeah, yeah. Well,
being robbed for your Rolex, that's only 10 grand, isn't it? It's only 20 grand. Some Bitcoin
sure.
goes round with his mobile phone with 20 million on there. That's worth a blooming proper, Heat mob with Al Pacino in it. I mean, there's never been bigger robberies in the history of the world than there's been in crypto.
Put it this way: if you could, I don't know, anonymously buy something, hypothetically, I'm not saying you will, and for the people watching out there, please don't bother Clem. He's not going to do this. But if you were to invest in something, what would you look at? What kinds of projects? What kinds of tokenomics narratives are you interested in 2025, 2026?
Okay, they're not here yet, and when they come, I will dabble. Okay, and my wallets will be so cold you'll get frostbite even looking at them. Yeah, right now there's a dearth of new projects because you've got to have nerves of steel to be in crypto and to Gensler. Until Trump came along, you were dicing with the penitentiary to be in crypto. But now that's all over. So there will be a blossoming of crypto projects with real use cases that will be fabulous, that will be worth huge sums, and they're probably they'll appear because they've been coded in private, or the work will start now or has already begun, and they will start to blossom into 2026. So when you start to see new things that are doing interesting stuff, have got a use case that you think, I could use one of them, and you look at them and you see they've got a proper team, and they're not a load of Ruskies, and they're not got pictures of apes when they say who they are doing it. Then that will be a place to look, because there will be absolutely mind-blowingly valuable blockchain stroke crypto projects coming out now that you can actually do it without worrying about whether they're going to stop you at the airport and question you. And that's a big change, a big development, and that's going to be significant for the future of crypto and blockchain. And that's kind of started, but it will take a year, 18 months, 2 years for this stuff to start coming through. And when it does, it's going to be great.
Well, let's follow up on that later. Let's shift gears now and finish off on precious metals. Gold is for war. Then what is platinum and palladium for? You like those metals?
Platinum and palladium is for dealing with all the pollution it's going to be because of AI. I mean, you have to understand there's no second place in AI. Yeah. And that's geopolitical. Yeah. So is America going to stop creating more AI because it wants to let China be superior? Is China going to stop burning coal so it can empower its AI so it can be smarter than the US? There's no limit. So they're going to be boiling the oceans. And the only way to ameliorate boiling the oceans is to use catalysts like platinum, like palladium, to deal with all the output of all that burning of energy. Yeah. Mm-hmm. Remember, that's why they're in cars. And, gas cars aren't going anywhere anymore. Why is that then? Well, because all possible energy is going to be used to drive AI, which is AI equals energy usage. It's a straight dynamic. They're going to be boiling the oceans. And the only thing to keep the oceans clean, or at least not as bad as it's going to be, is going to be platinum and palladium. And what's incredible, and I always check this because I say it and I don't believe it myself, they only make 200 tons of it every year, platinum. Only make 200 tons of palladium every year, 200 tons. Gold, 3,200 tons. Silver, I think it's 50,000 tons. 200 tons. That's zero. And that's what they're going to have to use when they're burning all these energy sources to drive AI. And there's no limit to the amount of energy they're going to want to use. No limit.
Wait a minute. What happened here? This is the platinum chart. What happened here?
I started telling people.
Yeah, well, that's it. 'Cause stop telling people, Clem. No, I'm kidding. All right. Are you still bullish after? Hold up. We missed this narrative,
Okay.
you and I, in the last 2 months. We didn't even talk about it. I mean, I missed it. You didn't. It's up 50%. Are you still bullish?
I did put a chart out on Fools about, I don't know, 3 months ago, right at the bottom of that, saying platinum. Okay, so what I just said, I could say it gets worse or it gets better depending on your point. I say it gets better because I've got more platinum than anything. And it gets better because once upon a time, platinum was the same price as gold. Not long ago. So it should be $3,500.
That's true.
And 10 or 20 years before that, it was twice the price of gold. Yeah. And they only make 200 tons of it, not 3,000 tons.
That's true. At its
tons.
peak in 2008, it was more than twice the price of gold. It was more expensive than gold in 2011. You're right. Let me just, you know what? Let's actually see what happened.
I have a habit
here.
of that, David. I have a habit of that. I have a habit of saying things that people don't believe. And then when they look it up, they go, oh, no, he's not making it up.
Yeah,
And
these
if
are
you
not
wanna
the
know-
same scale y-axes, but gold really started outperforming in the last 5 years. Anyway, okay, so what happened the last year? Last month, rather, sorry.
Well, okay, first of all, why is it so cheap when they only make 200 tons of it? Well, it's because it's used a lot for cat converters. And of course, petrol cars were going away, weren't they, once upon a time? And all of a sudden, they're not going away anymore because they're going to need all the energy in all the world to boil the oceans to do AI. So you're not going to get rid of gasoline, are you? Or diesel or anything for that matter. Or coal. Oh, notice how coal is now in fashion. Oh, we're going to do coal mines now again. Oh, yeah. Right. What happened there then? Oh, nuclear. Oh, that's wonderful stuff, you know. I know it used to kill everybody and was terrible for the world and was the worst thing since Satan rose. But no, we like it now. Why do you think that all is? It's because of AI. They need all the energy for AI. And they will boil the oceans. And by the copper is another one. But if you pull up the palladium chart, go on, pull it up.
Yeah,
this is the other one of those.
It's up 37% in the last year. I mean, year to date. I mean, still very impressive. But I'm sorry.
Go back 3 years. Go back 3 years.
2 years. Okay.
3 years. More. Just go back. Keep going. Oh, look at that price. Oh, look at that price. Oh, when was that then? Oh, it's only a few years ago. It was $3,400. Oh.
Right, and then the palladium story.
And then cars were going to go out of fashion, and then everyone was going to be electric, and there wasn't going to be any petrol cars anymore. And they were going to crush up all those cat converters, and there was going to be all this palladium that nobody needed. And then
because they didn't need catalytic converters. That was the story.
Yep.
Yeah.
And now we're going to need catalytic converters because they're going to be burning all energy. It doesn't matter how dirty it is, they're going to be burning it. And if you're not going to, have dark, sooty clouds everywhere, you're going to have catalysts to break that stuff down. And that's platinum and that's palladium. In fact, everything in the periodic table is back in fashion. And copper, I need to load up on copper, but I don't really know how to get tons of copper in my garage. And it's not quite as convenient as something that's palladium, but there ain't nowhere enough copper in the world, period, for what's coming. Not even close. Not even before AI was there enough copper. Electrification of the world, not enough copper. Obviously, they're going to come up with clever solutions to work around it. But they're absolutely going to eat everything that's copper. Copper's just going to go, at some point, like that platinum thing. I mean, it hasn't happened yet, but that's the incredible thing. The whole world's going to wake up and go, oh, copper, need it. Up it's going to go.
Copper is...
Metals are going to go nuts. Metals are going to go nuts in the next 2 or 3 years.
Do you have an upside target for platinum from here? It's already up 50%. It's currently at...
Go 1 to 1.
I'm sorry?
It's going to go
1 to 1 to gold. Yes.
It's probably going to be $5,000 by the time it gets.
Yeah, that implies another 100% upside from here. And that's probably more than that. Okay, yeah, there is a historical precedent for being 1 to 1. In fact, even probably 2 to 1 to gold. So that's not really a far-fetched estimate. So your thesis is AI demand. Yeah.
You've got to come back to this fact. 200 tons. Do you realize how little 200 tons is? An American family consumes 50 tons of stuff every year. 50 tons on its own. So that's like 4 families' consumption of stuff. That's how little it is. It's like, it might as well be none. And there's hardly anywhere that does it. There's some in Russia, some in South Africa, some in America. That's it. 200 tons. It's not like, oh, there's all that platinum over there. We can't be bothered to dig it up because it's not expensive enough. It's just not around.
Wow. There's a story for us.
Wow. Yeah. You heard it
Clem's
here
buying
first.
platinum.
You could have read it in full when I wrote it a few months ago first, but it's still a thing. Still a thing. And it's got a long way to go. Long way to go. I mean, I think, I'm not guaranteeing it's going to go 1-to-1. I'm not guaranteeing gold's going to go to 5,000. But there's gold is for war. There's no shortage of that at the moment. And AI means that the thing to think about with AI, it's the next industrial revolution. So everything's going to go off the dart. Okay, productivity through the roof. I mean, 500% increase in productivity for those working. Yeah. So not only is it going to need vast amounts of energy to drive it, and it's not a question of productivity and industrial revolution. It's a question of countries versus countries. They can't afford to be less intelligent than anybody else, can they? America's going to be less intelligent than Europe. All right, it's been a case for a long time, but you know what I'm saying. And is America going to be prepared to be less intelligent than China? I don't think so. Is China going to be prepared to be less intelligent than America? I don't think so. So they're going to need more AI, aren't they? And more and more and more and more and more. So you're going to have this vast amount of AI, vast amount of energy production and usage, which is going to feed back into the economy. You're going to have these tools of intelligence. So it's like inventing the steam engine, but for your brain. So that impact of that is absolutely gigantic. But the bottom of the pyramid are all these metals. And there's going to be not enough of them. And the value that they're going to add, because at the bottom of the pyramid, everyone goes, oh, it's just metal, who cares, right? But when there's not enough of them, all of a sudden, they are the thing that everything pivots around. So they're going to go up in value dramatically.
Clem, excellent interview. Thank you very much. We'll keep tabs on those assets that we talked about. Where do we follow you in the meantime?
Well, I've got my new site coming up, ANewFN, and there'll be a lot of me on there, if you can stomach it. And if you leave your email, you'll be the first to know. I write about all this stuff on Forbes a lot. And, if you want to follow this sort of stuff, it's there. Because this is actually all developing, because there's so much actually developing for better or for worse. That injects a lot of upside and a lot of opportunity into financial markets. And so, the only way to move the dial that the individual can do is vote, and vote with their money. And the good thing about money is it's not one man, one vote, it's $1, one vote. So, if you make the money, you can actually have more influence.
Clem, thank you very much. We'll put the links down below. So follow Clem there. And we'll see you next time. Thank you for watching. Don't forget to like and subscribe.